Fortunately, it's been through the racks over the last 2 years, and investors are going to wait until they see it's turned a corner. Now, of course, Craig Norgate wouldn't have wanted to sell those shares, but he's forced to because there was a lot of debt associated with it. So it wasn't his real choice to sell. I'm sure he's feeling pretty angry that he had to sell at this price. He would much prefer a higher price.
Of course, rural portfolio investments has really watered down its investment, obviously, here, from a high of 27.5%. down to just over 6. So that really, as you say, it's a huge clawback of their interest in PG.
Well, it is, and it's happened for two reasons, of course. The first reason, there was a massive rights issue last year, which they couldn't participate in. So the shareholding was diluted. It wasn't a sell-down of shares on their behalf. The second, last week, was the sale of half of their shares, which was the original shares they owned at the beginning. So they were severely diluted during last year's capital raising. So it hasn't been a good story, really, as far as those two investors are concerned. That is Craig Norgate and the McConnell family.
Exactly. Now, James, Fonterra's announcement of a 40 cent increase in the forecast payout to $6.10 has got to be good news for us all, hasn't it?
Well, definitely. I mean, when you consider what the original forecasted payment was for $4.55, then it's about a $1.6 billion injection into the economy. So it's a huge boost, not only for dairy farmers but also for the overall economy. And I would think that we're going to see that sort of flow through to the rural communities around New Zealand. And generally, it's a very good story.
Indeed. What actually is driving this rise, do you think?
Strong commodity prices, in short. I mean, when we're considering the other sectors of agriculture, they're suffering from the currency. Fonterra is struggling with the currency also. They're suffering up around 70 cents dealing with those things. But dairy commodity prices have increased, 115, 120% since their lows in February of last year. So that's a massive increase, and we're seeing, that's sort of continue. We saw a good increase in the past month, and I took from Fonterra's statement yesterday that they are seeing that these commodity prices should continue in over the next sort of in the medium term, I guess. And it really comes back to supply. Fears of drought here in New Zealand, Australian production down, EU production down because of harsh weather, and that all means that there's a bit of fear out there for buyers. And
some pretty strong demand from East Asia, I guess. That must be having a lot to do with this push.
Yeah, well, China, of course, is our #1 dairy market. They've seen massive economic growth over the past year, 11.9% in the last quarter. So they're really ticking along well. And the Middle East, of course, they're a big export market for us too. With oil over $80 a barrel, then that means it's quite profitable for them to pay good prices for dairy. And we're expecting to see oil sort of sit above those levels for a while. So that should facilitate some pretty good prices for dairy commodity prices. Yeah.
And will the farmers use that money to repay debt, or will they spend it? What do you think is going to happen with that money?
That was going to be my next question, Brian. Good point.
It's a choice to see what they do with that. But it definitely offers them an opportunity.
Okay.
But nevertheless, I guess some of the benefits of all this will be gobbled up by the downstream effects of the drought. I mean, these guys have had to, I think there's a national drop in milk production of 2% because of this. People have had to dry their cars off early, so production is down, and of course they'll be getting into a bit more debt, won't they?
Well, it was interesting yesterday. We have been seeing that the drought would have an effect on production, but Fonterra actually said that they're only expecting to see a flat production for this year, so they're not expecting to see a big drop. In some of those areas, the Northland and Waikato, then yes, they are drying off cows, but looking further south in Canterbury and Southland, they've had a pretty good season.
They're still pumping.
They're still pumping milk, and so we may not actually see a big effect on overall in terms of what happens with production, and that should really see a good injection into the economy. Of course, some farmers that have been affected by the drought, then that's going to have an effect on them. But when you think about what the price was at $4.55, then we've seen a 40% increase in the prices that they're getting. So unless they see a 40% drop in production, then they're going to be better off.
Indeed. Yep. Now, turning our attention to the sale of the Crayford farms, Brian, they owe more than $200 million to a variety of lenders. How realistic is it that a private backer is actually going to bail them out? As Alan Crayford has hinted.
Well, I don't, there's two sides of it. Whether there's a private backer who's going to bail out the Crayfords, or else the Hong Kong-based company is going to be able to buy the farms. First of all, I think it's highly unlikely that the Hong Kong-based company can. It doesn't have, it's a company with very little shareholders' funds. I would imagine it's got very little capacity to raise borrowings. And I think that there's been a lot of flags being flying over the Crayford farms and the purchase from Hong Kong, or China, if you like to call it. And I think it's highly unlikely that's going to occur. Now, whether you're going to get a backer for Alan Crayford itself, it's hard to know. I mean, certainly the receivers seem to still have the farms up for sale on the basis that all the deals that have been reported in the media are probably not going to come to fruition. So I think we still have some way to go before we'll get a final resolution regarding the Crayford farms.
Well, my reading of the report yesterday was a certain degree of scepticism, shall we say, from the receivers about Alan Crayford's comments that, in fact, he's in hard negotiations and could buy his way out of these problems.
Well, there has to be. I mean, bankers have changed these days, and financiers. They are only lending on very prudent business propositions and positions where they know that the people running the enterprise, whether it be a farm or a factory or a business, are good managers of that business. And certainly from what we read in the media, and it may or may not be correct, the Crayfords haven't exactly run those farms very well. People I talk to in the industry say that there's 3 lots of farms for sale at the moment, and the weakest parcel, the ones that have been run the worst, are the Crayford farms.
Yeah. So that track record's certainly going to affect their ability
It
to
has
sell.
to, particularly in an area where finance is difficult to raise. If you haven't got a good track record, it's not going to be easy for you to raise money.
Now, James, just keeping with the dairy sector in a way, the International Monetary Fund anticipates New Zealand growth to be supported by commodity prices, particularly in dairy over the next couple of years. What's behind their sort of optimism on our behalf, do you think?
Well, I guess they got it pretty right. They released their economic forecast last week, and they suggest that the New Zealand economy is going to expand by 3% this year and 3.25% next year, and that's really coming off the back of some solid dairy commodity prices.
Yeah.
And this week we've seen Fonterra increase their payout and give a good indication for next year. So that's going right through till the middle part of 2011. So Fonterra seeing strong commodity prices through that period. The International Monetary Fund say that, well, that should be good for our economy, and we've got to agree with that.
Indeed. Now, Brian, briefly, Allied Farmers had quite a busy week last week, selling off nearly $3.5 million worth of land to reduce debt acquired from the Hanover Finance and United loan books. Will we see further sell-offs in the wake of this transaction?
Oh yeah, very definitely. And the positive thing for Hanover investors is that although they only sold $3.4 million worth of property assets, the value of Allied Farmers shares went up by over 20 million. So what's going to happen is that every time they sell something, it should have a positive impact on the Allied Farmers share price, which of course is what Hanover investors have ended up with. There will be more sales. The value of those assets at the moment is 154 million. It's doubtful if they'll get 154 million, but if they got 70, 80, even 90 million dollars, I'm sure that would have a very positive effect on Allied Farmers share price, and therefore would mean the return to Hanover investors would be far greater than it is at present. But look, there's a long way to go. The assets weren't very good, and it is going to take some time before they realise more money from these assets.
Yeah, I mean, you say the assets weren't very good. I mean, it surprised me to read just yesterday a report saying that Allied is struggling to cope with the ongoing discovery of poor quality debt in the books. Surely they knew Hanover had poor quality loans on its books. Can't be a surprise to them. So you really wonder, did they do their due diligence?
Well, they did do due diligence. They would argue a number of things. I mean, a lot of these loans are very, very complex, and you do due diligence over a matter of a week or two, and it's very hard to get the grips with it. But the second argument they have is that there was a number of changes made after they did due diligence, but before they acquired the assets. And that's one of the things that the Allied Farmers executives are talking about, is that there was some changes made to some of the conditions. Maybe there was some of the guarantees, personal guarantees were forgiven by the previous owners of the company. So look, and the market has deteriorated quite rapidly since then. Now, I'm not being sympathetic towards the Allied Farmers executives, but the conditions changed in the property market, and I do think that they were over optimistic, but market conditions changes, and there was probably some changes made to some of those loans before they actually purchased the assets back at the end of last year.
Well, thanks for those insights, Brian and James. We'll be back in a moment with a wrap-up of today's discussion and the final word from our panellists about what they think is in store for the primary